Hello, everyone. My name is Susanna Chinanovich, and I am the Talent Acquisition Specialist. And I'm speaking with our esteemed agents here, Grace Glenn and Noel Loftus. And we're here to talk about the different challenges that we've been facing in the market and the shifts in the market. And I wanted to find out, Grace, if I could start with you. What are the current challenges right now as compared to last year? And secondly, what are your clients, what are they asking you in terms of what their potential anxieties are with the shifting market?
Sure. So the questions that we get the most often from our clients today, buyers and sellers, is now the right time to sell and buy, or should they wait until later? So in order to answer that question better, let's look at what happened in the market since last year, right? So the interest rate increased since the first or the second week of May 2022. And the market went slower at that point. However, now we're in January 2023. A lot of homes that did not sell in the last quarter of 2022, a lot of them have gone pending at this point.
I see.
And the open houses are a lot busier, right? We observe probably anywhere between 10 to 30 groups of buyers, not individuals, but families that came through. And we see that house that didn't sell in November or December went under agreement within the second and third week of January, which is typical in Massachusetts, because in Massachusetts you often see that the market start getting hotter in January.
So no, what are you seeing in the market now? That's different than it was even a month ago. What are you seeing in the last couple of weeks?
So what I'm seeing in the last week, 2 weeks or so is more buyers are coming out towards the end of well, everyone was in holiday season, Thanksgiving, Christmas, they kind of sit back a little bit, but they're coming out in force now. Just this past weekend, I had buyers in 2 different situations. We were involved in multiple offers, and talking to the other agents, everything was going above asking. Contingencies were non-existent, which indicates that buyers are ready to get back into the market. I don't think we're going to see the same frenzy as we saw 12 months ago.
Right.
But they are still there. They have money. They've been sitting on money. They're not afraid of the interest rate anymore. And somebody brought up I thought it was funny. Somebody had said, marry the house, date the rate.
Yes,
so it was
I've heard that as well.
So it was something that I've used it, and people have like, oh my God, that makes so much sense. Which means, refi that property down the road when the interest rates are more favorable. So those are what I've been seeing for the last couple of weeks.
Oh wow, that's interesting. It's almost as if people are becoming habituated to the current situation.
Exactly.
And they're understanding the lay of the land, the landscape, and what's happening, and now they're positioning themselves.
They're positioning themselves, and I feel like we as agents need to educate them in the sense that, hey, we're still waiting for the inventory to increase, and it's going to take time. We don't have inventory right now. Hence, we had 58 groups through our open house 2 weekends ago.
Wow.
It was a snowy Saturday afternoon. So
that's impressive.
It was, and these are groups that Grace had mentioned earlier. They're families. They're not just like 1 or 2 people. They're like groups of people. Bring in mom and dad, this kind of thing. So maybe they're getting some money, some help, from a third party, from a family member. I don't know, but they're back in the market. So
that's very positive.
And we do think that the buyers and sellers should act now, because once the interest rate goes down and the inventory still stays low, they're in bigger trouble.
They're
So
competitive.
we really do think the buyers should start buying right now, and the sellers should put their houses on the market. So then the market start flowing.
I see.
Now otherwise it can get very static.
Right. But it's a very dynamic market now. It's becoming.
It's a lot more dynamic now compared to 3 weeks ago.
Agreed. Yeah.
Wow.
I think the most important things for our clients to keep in mind is, how do you predict the market is going to perform in the following months?
The forecasting.
Correct. And then the questions became, what are the correct indicators to follow. Now, if you follow social media, you follow news channels and listen to economic reports, if you have paid attention, there's only one indicator that you can follow that directly affects the short-term market performance is inflation.
Okay.
Because inflation determines how our real estate mortgage lenders behave.
Right.
However, there's another problem with that. Is if you do follow the inflation, it could be just a little bit behind the market. Because we consumers, as buyers and sellers, as well as our mortgage lenders, our banks,
Right.
we often behave upon our anticipation of the market. So if you just follow the inflation, we often say, can you predict the market, or can you become aware after the result is already in front of you, which would be slightly slower than the market? Or some people are just in their own world, like they don't want to absorb it, like they believe what they believe, and they kind of turn blind on all kinds of indicators out there. They just think, I'm going to wait for the price to go down even further for another 300,000, 500,000. Unfortunately, today's market is a little bit more confusing.
It's more complicated.
Right,
yes.
compared to 2008 and 2009.
Right.
2009 was a real estate bubble, was a financial crisis. The banks were lending money to people who didn't have the capability of paying back.
Correct.
But today
a very
we
different
have
scenario today.
Yeah, today we have a lot of cash, a lot of equity in the market.
Right.
So it's very different from what was happening in 2008 and 2009.
Correct.
Right.
Yeah.
And people tend to think that the market can bounce back a lot quicker this time.
And just to recap, the strong indicators that you're mentioning is number one is
I was saying earlier that the indicator that the buyers and the sellers should follow is inflation, but if they do, they may be just slightly behind the market. So we often say that the devil is in the detail, right? Like if you go to the open houses today, right? One of the indicators that you can follow is to observe if the buyers are ready to buy, or are they just window shopping. In January, going into February now, we've seen that buyers are like already financially approved, financially qualified, screened, they're ready and available
so
to
they're
buy.
more motivated now.
Yeah, and I think in a way we can say that people often have short-term memory because people get used to the new situation, right? So the mortgage interest rate has been increasing since May last year, but it has been over half a year now. And the better way of saying that is probably that we should not underestimate humans'
adaptability.
Yes. Yeah. So at this point,
I think the pandemic helped us with that.
Yeah, I think a lot of buyers at this point have started to mentally accept the interest rate where it is. I do have to say, I do not believe that the mortgage interest rate will go down to 4 by the end of this year or maybe even next year, but it's possible to get closer to 5%. And once the interest rate moves toward that lower point, the buyer's going to be even more proactive. And we've already seen that happening in the first and second week of January.
Most properties that are priced correctly
Right.
are seeing multiple offers happening right away. So, and you know, speaking from listing side of things, we want to educate our sellers as to how to get them the most money for their properties.
Right.
We want to kind of help them with staging, professional photography, making some recommendations on, you know, how to best spend their money to get their properties on the market and get top dollar for it.
Right. Looking at the rate of investment. That
Right,
they spend their
and
money
also,
on.
not have them overspend per se,
Right.
but just kind of try and keep them, you know.
Right. So, is today's market a healthy market for investors?
Yeah, definitely. I've been working with both residential and commercial investors. Yes. So people tend to forget that interest rate is not a permanent issue. It can be adjusted, and I think most buyers start to understand that better now. Right. And as an investor, your focus should be the cash flow. It should be the cap rate. Should not be the interest rate. So there are all kinds of investment in the market, and we often with off-market resources and in different local markets we target different cap rates. And when it comes to commercial real estate, I do think that today's market is healthier for long-term hold. I think it's a little bit more challenging for flipping because inflation issues still not resolved.
Right.
And when it comes to commercial, the nature of the business, we're currently working on commercial opportunities for education, for lodging situations, but we're trying to avoid retail and office buildings because I would think that the impact of COVID may continue for another 5 years or so.
With
Although
the
we
hybrid workers.
yeah, although we don't, we're not influenced by COVID as much in our daily life in the entertainment sectors and stuff. But in an economic sense, I think retails and the office buildings may still be a little bit risky for the next 3 to 5 years. Yeah, so that's something we're not touching at the moment.
Right.
But other than those two, we're exploring a lot of opportunities.
Okay.
Yeah.
Priority list,
Exactly.
really.
Exactly.
And I do want to
Yeah.
tell everybody, Noah has a huge wealth of knowledge for home conditions, and he used to be on the construction.
That's
build
right.
side of
You
it.
started construction in Ireland, where you're originally from, correct?
Correct. I started a long time ago over there and have kind of moved.
What part of Ireland?
Longford,
Oh,
in the Midlands. Small little
Midlands.
area. Yeah,
Okay.
Small little area. Moved to London, worked over there in London, and worked here in Boston for a number of years, 20 plus years in the construction industry, both residential and commercial.
wow.
So,
Yeah.
So I
with
enjoy
a
work.
wealth of knowledge
Well,
and experience.
and experience, yeah, thank you. But I do enjoy working with buyers. I do enjoy educating them and answering questions. I don't always have the answers, but I have the resources to find the answers for them.
That's perfect. Yes. Wonderful. Well, you both make quite the team, I have to say.
Thank you.
Really. How many years experience combined?
What do we
You
say?
haven't done the math yet?
16?